talk about fraud risk management. The main reason is that I truly believe that the topic of fraud should be further discussed transparently within the organization. And I also believe that we need to stop focusing on just who is going to investigate frauds and focus more on how we can strengthen our internal processes to mitigate fraud risks and to actually identify potential fraud schemes that could happen in our own organization. And this is what fraud risk management is really all about. We continue from one year to another to identify and to see fraud events happening in so many different organizations. Last year, for example, in June in Germany, I talked about this a lot. There was a company called Wirecard that had a $2 billion loophole in its cash. There was cash missing in the amount of $2 billion, and it turned out to be a business model that was based on fictitious sales. Their external auditors failed to do a simple balance confirmation for many years. And this led to a big fraudulent activity in that company. So we are still seeing major frauds happening. And the reaction when frauds happen is usually, okay, where are the auditors? Why didn't anyone see it? Who's going to investigate it? Today's course is more about how can we adopt a methodology, a framework that will enable us to identify these loopholes within our organization, specifically related to fraud, and how we can implement mitigating measures, or what we can call anti-fraud controls, to mitigate such fraud risks from happening. So today we're going to be talking about first fraud and the pandemic, which is a topic that how is the COVID-19 impacting fraud in many organizations around the world. The ACFE is conducting monthly surveys in this regard, and I will be showing you some numbers on how fraud is actually happening in organizations as we speak. We're going to focus a little bit on fraud risk and exactly what is the definition of fraud risk. We're going to talk about the fraud risk management framework or the fraud risk management guide that was adopted by the Association of Certified Fraud Examiners, which is basically based on the COSO internal control integrated framework. I'm going to a little bit share with you some topics in the anti-fraud playbook that was issued by the ACFE last year with Grant Thornton. It's a very interesting document that shows the different types of schemes that we need to adopt to better enhance our fraud risk management capabilities. And we will talk about fraud prevention. And not only will we discuss today what type of anti-fraud controls that need to exist within the organization. This is not enough. We're going to talk about how these anti-fraud controls need to be implemented effectively. Because if we have learned something from the past, is that there are many organizations that claim to have excellent processes and excellent controls. And when things go downhill, we realize that all of that was just a ticking in the box exercise. And there were genuine weaknesses in the design of these anti-fraud controls. And we will talk in further details throughout the presentation about that. Before I start, I want to share with you a few references. Basically, this presentation is a combination of information which I have collated from many different sources. So first, the internal control integrated framework that was issued by COSO. This is a very important framework because the fraud risk management guide issued by the ACFE is actually based on the 5 components of the COSO internal control integrated framework, which I will share with you in a bit. Also, there's the anti-fraud playbook, which I talked to you about. This provides detailed information and practical steps that you can take to develop and design your your fraud risk management framework. I also used a little bit from the ERM, the Enterprise Risk Management Aligning Risk with Strategy and Performance, also issued by COSO, a very interesting document. There's a lot of information that we can take from that. There's also the Fraud Risk Management Guide that was issued by the ACFE. I recommend all of you to take a look at it, especially those that are interested in this field. And there's also the survey that was conducted by the ACFE as it relates to how fraud is being is maturing now within organizations as a result of COVID-19. So these 5 documents, I really advise all of you to go through them. They provide some essential information that can really help us in this domain. So let's look at some numbers now. So basically, what we saw that as of November 2020, there was 79% of respondents who took the surveys, they observed an increase in fraud. 79% as of November 2020. Whereas these same respondents, 90% of them were expecting an increase of fraud over the next 12 months. So we can see that the risk of fraud is becoming higher inherently because we are switching operating models. So basically now we will see that there's a lot of override of internal controls that is happening in many organizations due to the circumstances that we are in. And what do we mean by control override? Control override is really when the board or the senior management, they make an intentional decision not to implement specific internal controls. So basically you go to your CFO or you go to your head of procurement and you ask them, why aren't you implementing this specific policy or this control or this authority matrix? They will say, okay, well, listen, I have the approval of the board of directors or I have the approval of the senior man. Well, look, approval doesn't mean that the fraud risk does not exist. Approval, it means they allowed the control not to be implemented, but this automatically and inherently increases fraud risk, especially now that we are changing operating models as well. So there are many activities that are taking place now without formal procedures, and this will also automatically enhance fraud risk. So we can also see something very interesting here in the change in the difficulty level when it comes to anti-fraud activities. So 26% of the people who took the survey, they said it's becoming significantly more challenging to prevent fraud, or it's also becoming more challenging to detect and investigate fraud. Whereas 51 to 50%, they said it's slightly more challenging in this era. Now, let's look at the expected change in anti-fraud program budgets over the next 12 months. So we can see that overall budget for anti-fraud programs, we can see that it's slightly increasing, which is good news, that many organizations are now seeing the need to invest in anti-fraud activities, which is something that we don't see a lot in the region, actually. And it's still very rare that we see organizations specifically investing in specific anti-fraud activities. We do it indirectly in many situations, but to explicitly highlight specific anti-fraud investment, this is an area that we still need to work on. Globally, we're seeing increases in this regard. The level of anti-fraud staffing, we're also seeing some increases in this regard, which is good news. I will talk about it later on, that we currently see we're still relying on internal auditors, we're still relying on compliance professionals, or even the external auditors when it comes to specifically fraud investigation, not fraud prevention. What I would like to highlight in this regard is that we still ask where were the auditors when a fraud happens. But if you really talk to the auditors, both of them will tell you that we're not responsible for identifying fraud. So if you talk to the internal auditors, for example, they will tell you the standards tell us that we're not responsible to identify fraud. The standards tell us that we are responsible to identify indicators of fraud. If you talk to the external auditors, they will provide you with the contract with these small clauses, and they will show you exactly where they have no responsibility when it comes to fraud. So if you have the internal and the external auditors saying that, your compliance person, if we're talking optimistically, compliance is working on anti-fraud controls more than on fraud investigation and detection. So basically, who is really responsible for fraud prevention, detection, and investigations within the organization? You will see this hopping from one person to another or one department to another with the lack of clarity as it relates to who needs to do exactly what when it comes to fraud. So this is why it's good news that we have anti-fraud staffing now increasing, at least globally. Hopefully in the region we'll start seeing it more and more. Investments in anti-fraud technologies are also increasing, so that's also good news. Use of fraud-related consultants and external resources, we're seeing it in many parts of the world now, especially in the region, that we are now more and more relying on forensics investigators or specific fraud investigators who have been trained and have the experience to provide consultations as it relates to prevention and detection and investigation. Throughout the presentation, I will be differentiating between fraud prevention, detection, and investigation, because I really believe people are putting them in one box, which is not the case. Fraud prevention responsibilities go from the board down to many departments. We'll talk about that in a bit. Whereas fraud investigations also will have different people responsible for that. So budgets for anti-fraud trainings are also increasing globally. That's good news. And the budget for travel for anti-fraud staff is also increasing. As we said, we are definitely witnessing a change in the overall frauds within organizations. We can see that over the next 12 months, as I said earlier, we're expecting a 90% increase in fraud. So how did COVID-19 impact fraud investigations? So we're having now a major challenge when it comes to investigating fraud in a pandemic environment. First, inability to travel is number one issue that many fraud investigators highlighted as a challenge for them. Second, conducting interviews. I mean, really, can we do a fraud investigation online? Can we do a fraud investigation through a Zoom meeting, basically? I really doubt that. A lack of access to evidence, it's becoming more and more difficult. Cancelled or postponed engagements or investigations, maintaining privacy and secrecy, changes in controls due to the remote workforce. As I was saying earlier, now we're shifting to a completely new environment in the absence of formal procedures and controls that need to go through a specific process for them to be well designed. So lack of oversight due to remote workforce, technology challenges. I mean, we're having now technology challenges running the day-to-day business of organizations. So how about when we come to talk about fraud investigations? Changes in judicial systems as well, are they adapted to cater for the new type of remote workforce when it comes to fraud investigations? So this is a very interesting slide. Now, the top 5 fraud schemes predicted to increase over the next 12 months. This is a very interesting survey to look into. First, number 1, cyber fraud, which makes sense. I mean, as we are going now more into a digital environment, we're expecting cyber fraud to increase significantly over the next 12 months. So this is an area that we need to pay attention to. Payment fraud, this is our next type of fraud that will emerge over the next 12 months. Unemployment fraud comes after that, fraud by vendors and sellers, and healthcare fraud, since now we are living in an environment where there's a lot of reliance on the healthcare systems. So what were the top 5 fraud schemes that were currently observed as we speak due to the coronavirus? We have, again, cyber fraud, identity theft, payment fraud, since everything now is online, unemployment fraud, and fraud by vendors and sellers. So these are things for you to take into consideration when you want to develop your anti-fraud program. Because as you will see in a bit, when you want to develop your anti-fraud program, you need to think like a fraudster. You need to think like a thief to see exactly where fraud could happen in your organization. And I believe these type of schemes that you see in front of you will give you some ideas about what other organizations are currently suffering from. So what are the fraud risk management components? As I said earlier, the fraud risk management guide is incoherent with the internal control integrated framework that was developed by COSO. The internal control integrated framework developed by COSO was based on 5 key components, which is the control environment, risk assessment, control activities, information and communication, and monitoring activities. I will talk about that in a bit. So since the fraud risk management guide came as a result of the COSO internal control framework, it's focused on 5 key components. So if you want to develop your anti-fraud program within your organization, this is what I need you to focus on. First, fraud risk governance. We'll talk about that in a bit. Second, fraud risk assessment. How will I identify fraud risks? Fraud control activities. What type of anti-fraud controls am I going to design and implement within my organization to mitigate these fraud risks that I am identifying? How will I conduct the fraud investigations and the related corrective action plans as a result of these investigations? And fraud risk management monitoring activities as well. What does that mean? Let's go through them together, okay? Fraud risk governance, what does that mean? Forget about the definition in front of you. Fraud risk governance is really about what are the systems, the framework, the design of the policies and the procedures that are approved and mandated by the board of directors that help in mitigating fraud throughout the organization. What do I mean by that? So what committee of the board of directors is going to oversee the fraud risk management framework? 1. 2, What committee is going to ensure the effectiveness of anti-fraud controls? 3, the tone at the top within the organization. Are we leading by example? Do I have the right culture within the organization that comes right from the top, that does not encourage fraud, that does not rationalize fraud? Okay, we have many cultures and environments that rationalize fraudulent activities. So this is something that has to do strictly with governance. Why? Because the governance, it's going to set the different pillars within that organization for which the directors and the senior management and the executives within that organization are going to implement and adopt to make sure that I am mitigating fraud risks to a large extent. So this is why fraud risk governance is critically important. Fraud risk assessment. We're going to do a detailed methodology together, me and you, on how we apply the fraud risk assessment methodology. But what really does that mean? It means that I want to identify fraud risks throughout my organization. Now, some of you might come and tell me, well, Mohamad, listen, when we apply the operational risk management framework within our organization, we're definitely taking into consideration fraud risks. Well, are we? Because the problem when it comes to fraud risk, fraud is a taboo topic. It's really something we don't talk about transparently within the organization. So we don't really identify them as specific fraud risks, or we are not encouraged to talk about them transparently. And this is why we need to have a separate process or a separate methodology that is fully focused on the identification of fraud risks throughout the organization. And we will talk about in a while about what are the different types of methods that we can use to identify fraud risks. And then we come to fraud control activities, which is designing these anti-fraud controls that mitigate these fraud risks that we have identified. We have a whole slide on the 15 common anti-fraud controls that we need to apply within our organization, which is aligned with this component so we can discuss in further details. Now, when it comes to fraud investigations and corrective action plans, what happens in many organizations, okay, is that, especially these days, organizations that are not prepared to deal with fraud. So what happens is that a fraud happens, and then suddenly there's chaos. Okay, so who's going to investigate this fraud? Internal audit, compliance, who else? Do we need someone from outside? And then they find themselves in a situation where they are taking very quick decisions due to the fact that they were not prepared. And what this component tells us is that we need to have a plan on how we internally deal or react when frauds take place within the organization. Okay, and this is where we need to decide who's going to do the investigation, which lawyer do I contact, which external party may I use to help me in the fraud investigation, so on and so forth. So you'll have a plan already set up. What I have realized in many organizations is that we are not ready to respond to fraud because we have presumption that auditors are responsible for that, which they are not. Or we have presumptions that that we are less likely to suffer from fraud, which we'll find out later that that is not the case. The fifth component of the fraud risk management guide or framework is very interesting. It's like an internal process within that framework to make sure that I'm continuously checking, revising, and reviewing all these different components to make sure that they are working effectively within the organization. So year on year, I recheck my ability to I recheck to what extent are my fraud risk governance activities effective. I recheck and assess to what extent is my fraud risk management framework effective. I assess the level of effectiveness in my anti-fraud controls, design and implementation, so on and so forth. So moving forward, so this is basically the fraud risk management process as you see in front of you. I need to establish governance, do the risk assessment, define the controls, report to the board of directors, and this is where you see this is hardly taking place. And it's very rare that we see a report going on the board desk called fraud risk management report or fraud risk management assessment. So it's very healthy that we start putting this topic on the board agenda. And of course, we need to monitor the process, as I said. Okay, guys, fraud risk management is really a journey. Okay, it's a journey that we need to go through. Till today, many risk management departments tell you, I'm not responsible for fraud risk. Okay, fine, that is an opinion, but we need to understand who is. Right? So it's a journey that you need to take throughout your organization, depending on where they sit on that maturity scale of fraud, which we will talk about later on. It's a journey that will get better year on year. We need to have a lot of education and awareness as to the many misconceptions that many directors and senior executives within many organizations have about fraud. Okay, so you even internal auditors, by the way, even external auditors, I see it many times, still have misconceptions about fraud. The problem is there are many opinions, which I respect, but at the same time, there is the science and there is the governance, what it tells us about that. So we need to get that clarified through a constant communication, constant periods of communication and awareness that is spread throughout the organization. It is very critical to identify fraud schemes. And this is something that everyone runs away from, because it's not easy for me to come to the head of procurement and tell him, okay, or her, listen, this is where the fraud schemes may happen in your department. This is not something that they're going to really accept. Or it's not going to be acceptable for me to go to the CEO and tell him or her that, okay, listen, this is where you may abuse your powers, or this is an area where you may actually have fraud that is under your direction. Also, it's very difficult for me to go tell the board of directors why I need segregate, why I need a conflict, transparency, why I need disclosures, why I need to make sure related party transactions are adequately reviewed and assessed. So this is something that will also, we need to start venturing into through identifying these specific types of fraud schemes that could exist within our organization. We're going to talk a little bit about internal controls and the importance to focus on preventive internal controls, which can actually not allow a fraud to happen, rather than detective control, which at best helps us identify the fraud at earlier stages, but still some damage will already have been done. So let's talk about a little bit about fraud governance. I really advise you to download the anti-fraud playbook, which has this very interesting anti-fraud assessment model that can help you define where your organization sits today when it comes to fraud, and where do you aim for it to reach. So basically, someone asked me last time, okay, what do you mean ad hoc? Okay, which organizations are considered ad hoc? Guys, please mute. Guys, please mute. Thank you. So someone asked me last time, okay, what defines ad hoc? How would you call an organization ad hoc? Well, I told them very simply, if fraud is not on the agenda of the audit committee or the compliance committee or even the board of directors, if I have audit committee members that are not qualified to deal with fraud related topics, if I have compliance functions that don't believe they are ready to handle topics relating to code of conduct, to disclosures, to transparency, so on and so forth, if I have a risk management function that doesn't believe fraud risk falls under their mandate, if I have an environment within the organization that still believes fraud is a taboo topic that we don't talk about, if the first reaction when a fraud happens in the organization is that where were the auditors, rather than how did it happen, what controls were weak, who was responsible for that area, let's hold them accountable. If we are still in an organization that lacks a proper performance measurement system that can really define the basis upon which people are remunerated, and that can really help in decreasing the pressure on employees, which may impact fraud at a later stage. So this defines you as an ad hoc organization when it comes to fraud. And as you want to grow on, well, okay, you need to culturally grow, procedurally grow, you need to have a fraud risk management framework, you need to have an anti-fraud policy, you need to have a fraud risk register, you need to have well-designed anti-fraud controls, so on and so forth, many of the topics that we will be discussing throughout this throughout this presentation. So what I advise you to do, go through this model, see where you sit, and determine where you want to reach. And please don't say that I'm ad hoc, I want to be leadership. Okay, that's not practical. You're gonna say, okay, I'm ad hoc. These are the small steps we as an organization are gonna take this year. These are the steps we're gonna take the year after that, so on and so forth. So now, let's talk about two famous triangles. You've all heard about the fraud triangle, which I will talk about a little bit more in later slides. But the fraud triangle is very simple. It's a study. It's a psychological study that was done by a professor saying that for an employee to commit a fraud, there are three factors that need to happen at the same time for that specific person. What are these factors? First factor is opportunity, which is the opportunity to commit the fraud. Second, at the same time, he needs to be under a certain amount of pressure that will push him to do that fraud if he got the opportunity. Third, rationalization. He needs to have the capability to rationalize for him or herself why we are doing this fraud. So these three factors need to take place exactly at the same time for that person to commit the fraud. Now, what's the lesson for us as people who want to design an anti-fraud framework or who wants to implement a fraud risk assessment? This triangle can help us determine and identify where are these specific areas within our organization that are most vulnerable to these three factors of the fraud triangle. So I need to ask myself, okay, where is the weakest link within my organization when it comes to procedures, policies, systems, controls, so on and so forth? So this is an area where there is a high level of opportunity for the fraud to happen. Okay, are my employees under a certain amount of pressure that will push them to do fraud? I mean, I will take the Wells Fargo case, for example. Wells Fargo designed a sales strategy that was so severe in terms of accountability because it told them if you don't reach that target, that unachievable target, you will be fired. So what happened? 2,000 employees, they created, 5,000 employees, they created 2 million fake customer accounts. 5,000 employees committed a fraud. Why? You put them under pressure. There was the opportunity to do that in the systems, and they rationalized it to themselves. If I get fired, I lose my insurance. My kid cannot get medical treatment, so on and so forth. Versus the integrity triangle. What is really the integrity triangle? The integrity triangle is the opposite of the fraud triangle. It tells how employees need to react and act in their organization to make sure things are effectively and smoothly executed. So the fraud triangle is when an employee understands and appreciates that they have responsibility to their organization, that they are accountable to the mission of that organization, and that they have the authority to effect positive change in that. So these two triangles, if I identify in my organization what weaknesses exist relating to these two triangles, I can fill in many governance gaps that can help me further strengthen my overall governance within the organization. So when it comes to this slide here, basically this is a summary of what I discussed. So we need to have a fraud risk management framework. We need to have strong fraud risk governance. We need to have a fraud risk management policy. We need to have specific goals, a program, and I need awareness throughout the organization, from the board down to every single department, on the need to identify and manage fraud risks. So now we go into the next phase, the next component of the fraud risk management guide, which is fraud risk assessment. So how do we identify fraud risks? As I said earlier, the first thing you need to do, you need to think like a fraudster. And by the way, as smart as you think you are, a fraudster is always smarter. And that's why we need to do our best to think like a fraudster, to think exactly where are areas within the organizations that could be exploited. You will be shocked on how smart certain fraudsters are. They can actually identify weaknesses that you will never see. And you need to train yourself to always think where frauds can happen internally and externally. So we need to identify these fraud schemes within our organization that could impact specific departments and processes. We need to consider all different types of frauds, internal and external frauds, and I will talk about that in a bit. We need to have brainstorming sessions with key personnel in the organization. And this is something very difficult. I mean, imagine you sit with your CFO and you ask him or her, where can financial reporting fraud happen? So you're basically telling him, how can you commit fraud within the organization? This is not an easy discussion to have. So now that you have identified what are the different types of fraud schemes, you've identified all the different types of specific fraud risks that can happen. So which is, a fraud risk is basically the possibility of a future event happening that will result in a fraud that will not allow me to achieve my operational objective. This is the definition of a fraud risk. So as in any other typical risk assessment, we need to have a fraud risk register that will detail and dictate the type of fraud risk that we have and what are the underlying controls that we need to. So there are 9 phases for a fraud risk assessment to be conducted in your organization. First, you need to create a fraud risk assessment team. Now the question is who? Okay, many of our, almost all of our organizations still don't have a specific fraud department. And if that fraud department does exist, you will see it mainly part of the compliance function. But even there, if you go down into the methodology and mandate of that specific so-called fraud department, you will realize that this fraud department is only focused on fraud investigation. So they only start working when a fraud actually happens. What I'm talking about here is that doing a fraud risk assessment before any fraud happens to see where are the weaknesses within our organization. So you need to create a team. This team, in my opinion, needs to be diversified. So you'll have maybe someone from audit, someone from risk, someone from compliance, someone from legal, someone from operational risk, someone from the business. That is also healthy. To get all these different brains, talking to each other and seeing where are these specific areas that could have fraud risks within the organization. We need to determine a starting point. Where will we start? We need to identify all possible fraud schemes. IT, non-IT, financial, non-financial, all different types of schemes. From the boardroom, from conflicts of interest, from segregation of duties, from related party transaction, from fronting organizations that could have underlying ownership with employees or directors, down to the specific operational processes. We need to estimate the likelihood of these schemes happening. Remember that sometimes we have anti-fraud controls that could possibly working. So that will impact the likelihood of these frauds happening. We need to identify these controls and assess their effectiveness. We need to prioritize these fraud schemes. Which fraud schemes will I give the utmost attention to? We need to assess and respond to high priority fraud schemes, document the risk assessment, and reassess it periodically. So, sorry about that. So during the risk assessment, okay, there are financial and structural red flags and transactional red flags that you need to pay attention to. So first, structural red flags. What do we mean by structural red flags? Structural red flags of fraud, very simple. Look at your organizational structure. Do I have areas or activities that are not properly segregated? Do I have the IT security reporting to the head of IT, directly or indirectly? Do I have the head of credit risk reporting to the head of corporate banking, for example? Do I have financial control reporting directly to someone that is conflicting with that role? So do I have excessive privileges to the CEO or to the CFO or to the head of procurement? These are structural red flags. Do I have the absence of systems? Do I have no automated controls? These are structural red flags that are indicative of inherently high levels of fraud risks. We have personnel red flags. Guys, remember something very important. Most fraudsters, when I talk about occupational fraud, so internal fraud, these guys, these ladies, these gentlemen, they are hired into the organization. So you hire a fraudster, all right? So the more lenient or the more weak onboarding processes you have for employees, directors, and senior executives, the more you are exposing yourselves to fraud risks. Okay, so if you don't have a process to hire the right board of directors, or to hire the right C-suite, or the heads of departments, or even regular employees, you are at risk of hiring a fraudster. So these are red flags that you need to consider. Weak HR and onboarding processes. Operational red flags. Again, weak procedures, outdated policies, outdated systems, outdated job descriptions, absence of performance metrics. Third-party arrangement red flags. This is critical. Many frauds happen through collusion between third parties and people inside your organization. So what kind of systems do you have to do the proper due diligence on these third parties to make sure you are onboarding people with no beneficial or financial interest that they might have with employees within your organization? Financial performance red flags. This is basically relating to the structure of your financial statements. So if you are a company where 80% of your net profit is not related to your core operating income or your core operations, you are at risk of something fishy going on. If we go further, if bonuses are dispersed by this 80% profits that have nothing to do with your core income, okay, then also we are running at higher risk as well. So we have many financial performance metrics that could be related to red flags of fraud. We don't have time to discuss them in this presentation, but you need to consider things like that. Accounting system red flags. Now also, if I have a weak accounting system, if my CFO still loves using Excel sheets, if I don't have proper maker checkers within my finance department, I'm also at risk. So let's look now together at when you want to do a fraud risk assessment. So these are behavioral red flags that you want to consider during your risk assessment. First, according to the ACFE Occupational Fraud Survey that is done every 2 years, the number one red flag of a fraudster is someone living beyond their means. So someone making 20,000 riyals and spending 100. Someone with a minimal income and living a very lavish lifestyle that cannot be justified. This is the number one red flag of fraud. Someone making $2,000 a month and living the life of someone making $10,000 a month. So these are things to take into consideration. Financial difficulties. Anyone under any key employee under financial difficulties is at risk of committing a fraud. And this is backed up by science. Why? Because remember the fraud triangle that I talked about. Financial difficulties increase pressure. So if you have this pressure element with the opportunity and the rationalization can easily come, then you are at high risk of a fraud being committed. Someone with control issues. Someone with a wheeler-dealer attitude. What's a wheeler-dealer attitude? A wheeler-dealer attitude is an employee or a director or a senior official who is basically fake. Okay, so someone that is fake, that is not natural, is a liar most of the time. So someone that's not really someone that we can say something is fishy going on with that person. Divorce, family problems, someone that's defensive all the time, a conspiracy theorist maybe, complains about lack of authority, addiction problems, so on and so forth. You can see the rest on your own. So why is a fraud risk assessment needed? It is needed because it empowers the anti-fraud program. It makes it stronger. It enforces the ethics program within the organization, enables the board to identify vulnerable areas to fraud, as I said earlier. It helps us invest controls in the right places that help us in identifying these vulnerable areas. And it's a powerful proactive role in fraud fighting. Again, I don't want to stress enough on the power of this triangle in helping us identifying these weaknesses that we have in the different processes within our organization. When we do a fraud risk assessment, guys, we need to differentiate between internal and external fraud. When it comes to internal fraud, we have three types of fraud. We have corruption, bribery, economic extortion, someone that is using knowledge within that organization to make profit on the side. And there's a very thin line here. It mainly goes down to disclosure. So am I an organization that has a proper system that allows these different executives to disclose any investments that they have in other organizations or any other businesses that they have that possibly could conflict with their duties within our organization? So corruption is the first type of internal fraud. Asset misappropriation is the second type of internal fraud. And what is asset misappropriation? Is basically when an employee steals assets from the organization, whether they are information,
or its physical assets. And we have fraudulent financial reporting, which is when the organization fraudulently manipulates its financial reports in order to beef up sales and profits, to make more bonuses, increase market share, increase stock prices to make incentives, so on and so forth. Statistically speaking, guys, fraudulent financial reporting is the lowest type of frauds that could happen. However, when they do happen, they are by far the costliest frauds to the organization. Example, Wirecard, example, Enron. These were all fraudulent financial reporting frauds. Asset misappropriation is more likely to happen with least impact in terms of financial cost, and in the middle we have corruption. So what are impacts of fraud on the organization? We have many impacts. Many people only believe that financial impact is what's most important to us when it comes to fraud. It's very important that we identify fraud risks, not only for the financial impact, but at the same time for all of the different impacts that you can see in front of you on this screen. So we have financial statements, of course. We have significance to operations, brand value and operations, and reputation, sorry. We have the way we are perceived. We can lose licenses. We can lose productivity. We can lose key staff. We can get adverse media coverage. So there are many impacts to fraud other than those that are limited to financial aspects. So when we conduct this fraud risk assessment, we need to consider, as I said, conflict of interest, insider trading, theft of competitive trade secrets, anti-competitive practices, environmental violations, and trade and customer regulation. Of course, this all depends on your industry, guys. Okay? So there's no one size fits all. So we're going to have to customize and tailor our fraud risk framework to the type of organization that we have, to the culture of the organization, and to the type of industry. Because every industry, as you see on the slide, every industry will have its own specific type of inherent fraud factors that will impact it. So what are factors that influence fraud risk? The nature of the business, definitely. A bank, for example, will have a different set of fraud risks than a manufacturing company, than an insurance company, than an energy company, for example. So the nature of business has a key role on these specific inherent type of fraud risks that exist within the organization. So these are inherent fraud risks, whether we like it or not. Just because we are in this business, we have these specific type of inherent fraud risks. And you need, as part of this exercise, to identify them. You need to assess what are these inherent fraud risks. The operating environment plays a key role, guys. Okay. So if we have a weak operating environment, our fraud risk will go up. Effectiveness of internal control. Are we an organization known to have strong or weak internal controls? You can tell that by your internal audit reports. This is where your internal audit function plays a critical role, because basically internal audit functions have a role of assessing the effectiveness of internal controls throughout these different processes. And if I see more internal audit reports stating unsatisfactory control environments, I am automatically at a higher risk of fraud. And then we have the company, its employees, its ethics and its values, its culture. Right? Culture plays a key role. So you can tell exactly where fraud is happening within the organization or how it might happen just by assessing the culture, knowing who in that organization is powerful, who is politically strong, and what type of ethics they have. You will directly be able to make your own presumptions about the level of fraud risks that exist within that specific organization. So key questions to ask yourself. Again, I want to talk a little bit about control override. So control override, again, for many of you joined us in the middle. Control override is when your board or your senior management intentionally take that decision not to implement that specific control. It doesn't make it right, guys. Okay, so I've seen many incidences where you go to a process owner and you tell him or you tell her, okay, why didn't you implement this specific procedure? Why didn't you apply this authority method? Oh, we have a board approval. Oh, we have a CEO approval. Okay, fine. That makes the transaction correct. but it doesn't mean it decreases fraud risk in any way. It actually increases fraud risks. By the way, many frauds happen after they are provided a green light by the board or the senior management through specific types of approvals without knowing that they are committing a fraud. So many times you will find that specific employees or CEOs or management, they go to the board of directors and they take specific privileges under the context of maybe enhancing productivity, enhancing the business environment, and then you end up with a big fraud. See, that's override. That's control override. This is when you have taken that decision. And statistically, according to the many surveys that were published by the ACFE, 33% of frauds are happening as a result of control override. So what makes a good risk assessment? Simply, guys, collaboration among the team, the right sponsor, someone who is courageous enough to sit down in front of these different departments and talk about fraud, especially if he has the backup of the board. So guys, as they say, if the board is not on board with the fraud risk assessment exercise, don't bother yourself. You're wasting your time because no one's going to take it seriously. So I need the right sponsor to have the backing of the board to do this job. Independence and objectivity of the team, that's very important. People with the business knowledge. You cannot get someone that doesn't understand the industry to do a fraud risk assessment. Okay? It's not enough for me to understand what fraud is and what are anti-fraud controls to come and do a fraud risk assessment for you. I need to have good knowledge about the industry. I need to have someone on board with good IT knowledge, because as we become more and more automated, as our industries become more and more digital, okay, all processes are automated now. I will need people with that specific type of expertise when it comes to IT, talking about cyber fraud earlier, to help us in that regard. Accessibility, you need to have a team with accessibility to all the people within your organization. Trust, people we can trust, people that can think like a fraudster. At the same time, they're not conspiracy theorists, and a risk assessment that is live and relevant. We need to gather a lot of information during a fraud risk assessment. Interviews, focus groups, surveys, anonymous feedback mechanisms can really help. So specific to information technology, I included this slide on purpose because I'm a firm believer that the future, we're all going to be IT professionals, all right? So there's no such thing in the future as a manual control, in my opinion. There's no such thing as an IT auditor and a normal auditor. We're all going to be IT auditors. We're all going to be IT professionals because at the end of the day, either users or enablers, we're dealing with IT. We're going into a digital economy. Our organizations are going to become automated. And therefore, these 6 types of risks need to be taken into consideration when it comes to fraud: data integrity, hackers, system security, data theft, viruses, unauthorized access, data sabotage. All are areas that you need to take into consideration, guys, when you want to do your fraud risk assessment. I've already talked about all of these in this slide. I'm not going to talk about that again. So fraud control activities, okay? So definitely we're going to have to rely more and more on analytics. I don't have time to go into the details of these, but we need to have rule-based analytics like we do in ACL. For many people working in compliance or audit and banks, they are more now accustomed to rule-based analytics. Anomaly detection analytics, also we use that many times. Predictive analytics, network analytics, and text analytics is also types of controls that can help us in this regard. What kind of procedures do we can use to prevent fraud? Well, guys, okay, we need to increase the perception of detection. It has been now known that when employees have the belief that they are monitored, it decreases fraud risk to a large extent. Proactive audit procedures, analytics, analyzing different processes, analyzing the data, analyzing the operations can help us identify specific fluctuations that could be indicative of fraud. Fraud assessment questioning, surprise audits where possible, anti-fraud education, strong segregation of duties, strong governance are all areas that can help in that. I want to talk about this slide. This is a very important slide. I need you all to pay attention on this slide. You're going to love it. So these are 15 anti-fraud controls you can implement in your organization.
Okay? Now let's start with them, and I will talk briefly about design and implementation because they vary deeply. Okay? So the number one anti-fraud control is external audit of financial statements. In design, all organizations have external auditors. When it comes to implementation, this control, specifically, excuse me for being very frank, it's failing. Okay, it's failing for so many different reasons I cannot go into now. I don't have time. But the more we are seeing these big clash action frauds, these very big frauds, we realize that the external auditors are dropping the ball. Wirecard was an example. 5 years back in the Middle East, we had a major fraud. One auditor came, gave a clean bill. The investors, they got another external auditor from outside the region. They identified a fraud. So our problem is that with this anti-fraud control, the governance around it regarding selection and oversight of the external auditor needs major enhancement to make this anti-fraud strong. Now, I'm not speaking from my mind. Statistically speaking, 86% of frauds that happen have external auditors. I'm actually quoting fraud. So it's a good control to have, but it needs to be made effective. Code of conduct, again, a good control may not be implemented properly. Many organizations, they see the code of conduct on day one when they hire them. They sign this big document, they take it back, and that's it. Is the code of conduct aligned with the industry? Does it specifically give examples? Are people continuously trained on the code of conduct? This is what makes it effective. So if you want to use a checklist approach, these anti-fraud controls, most of your organizations will have. If you come down to the implementation of these controls, you may, most likely, realize major weaknesses in their implementation. Internal audit functions. I could have a strong internal audit function. I could have a weak internal audit function. I don't have time to go into the details. But if you have a weak internal audit function, that's a checklist. Okay, you have an internal audit function that has no value. Management certification of financial statements, management reviews, hotlines. Okay, so when we talk about hotlines, whistleblowing systems, so you will find an organization, you will ask them, you have a whistleblowing system, they will say yes. Okay, how many times was it used last year? 0. Okay, amazing, well done. It's not effective. Is it internal hotline? Is it external hotline? So on and so forth. So also a lot of detail goes into that. Audit committees, independent audit committees. Are they truly independent? Are they acting as a mailbox between the auditor and the board? Or do I have on the audit committee the right diversified background of individuals who have audit, accounting, finance, industry background that can challenge the auditors? This is what I need to have an effective audit committee. I don't need just someone who is called independent to relay the message to the board of directors about what the auditor is saying. And this is a major weakness in many organizations, that we are still, and it's really, I talk about this very frankly. Till now we say, okay, we need an audit committee member with an accounting degree. Okay, fine, but is that really what we need? We need someone with the risk background. We need someone, maybe an ex-auditor. We need someone who did the job. We need someone with a governance background. We don't need someone that the internal auditor needs to come and teach. So then you will be completely relying on the strength of your auditor. So if you have a weak auditor and a weak audit committee, this anti-fraud control does not exist. Anti-fraud policy. Many organizations don't have one. Employee support programs are very important. Why? They decrease pressure, which is another element of the fraud triangle, which automatically decreases the fraud risks that could happen. Fraud training for employees and executives, an area we're starting to witness increasing these days. A dedicated fraud department. And we need to determine exactly what that department does when it comes to fraud, because again, we have prevention, detection, and investigations. Each three have different expertise that need to be segregated differently. So when I say I have a fraud department, or I have a unit conducting fraud-related activities, I need to ask what type of activities are happening. A formal fraud risk assessment, which we have been discussing. Unfortunately, guys, even in regulated industries, I'm talking banks and insurance companies, when they do risk assessments, fraud risks are not clearly highlighted.
At best case scenario, they are indirectly referred to. Proactive data monitoring and analysis, job rotations, and rewards for whistleblowers. We don't have much time, but just to give you a hint, okay? In a recent study, so the number one way frauds are being detected in organizations is through tips by employees. So through whistleblowing program, okay? So this is the number one way frauds are being detected, statistically speaking. Ironically, the least internal control that exists, the least anti-fraud control that exists is the rewards for whistleblowers. So again, tone at the top, I'm not going to talk about it more. I already did. It's very important that I have the board, the committees, the management on board when it comes to fraud-related topics. Again, we hire our fraudsters, guys, so we need to have the proper background checks conducted to make sure I have a proper system of onboarding for employees, for vendors, for consultants, for contractors, to make sure that the system that I have designed ensures that I deal with honorable people. Hire good people, you will get good results. Hire ethical people, you will get ethical results. Hire unethical people, you will get bad results. So these are the components of an anti-fraud policy for if any of you are interesting to know. So we need to write the policy. We need to, it has a statement, the scope of the policy. It needs to include specific types of fraud that could happen in the organization or specific schemes. We need to have the reporting procedures for fraud to be directly done. We need to have investigation responsibilities, who does what, authorization for investigations and disciplinary actions, accountability, guys. I cannot talk enough about accountability, you know. If organizations don't have accountability, don't bother yourself with fraud risk assessments because they just won't work. Accountability is key. So performance management and measurement, I put this slide on purpose because I really believe one of the major weaknesses we have at a board and senior management level is the absence of the proactive role of the nomination and remuneration committee in effectively designing performance frameworks that can really link performance to remuneration. Okay? One of the biggest problems that you will see in many of the frauds that happen is that you will have this fake performance that is provided with remuneration that was unjust, that is only uncovered later on. Okay? And so this is why it's very critical that I am an organization that is capable of measuring performance in the right way. And that I have the ability to design the performance metrics that will enable me to really assess who is doing well, who is not, that I am not incentivizing fraudulent behavior through my performance measurement systems, and at the same time that I am enhancing performance and mitigating fraudulent activities. So this is why, guys, the issue of performance is very important. The issue of accountability is very important when it comes to fraud. This is why we need an ethics program. So we need to ensure that the ethics program within the organization is well designed and is well catered for, that includes all the details that it requires. I want to talk a little bit about preventive and detective controls. Guys, when we are going to identify fraud risks within the organization, so we're going to need to recommend controls that mitigate that to have two objectives, really, to mitigate risk and achieve objectives. So we need to rely more on preventive controls, guys. They are much more effective than detective controls, which, as I said, at best will only help us detect frauds earlier. So what are preventive controls that we can use when it comes to fraud risks? So as I said, fraud risk management, organizational awareness, employee background checks is very important, anti-fraud training, exit interviews, implementation of PMPs, segregation of duties, implementation of physical information security controls, aligning individual authority with responsibility, third-party and related party transaction reviews. I cannot focus enough on related party transactions and on segregation of duties and conflicts of interest. Now, detection controls, what types do I have? whistleblowing system. Okay, again, guys, the number one, it has been proven, the number one way to detect fraud, whistleblowing system. Okay, independent reconciliations, physical inspections, surprise audits, contract reviews are very critical. And the problem with contract reviews, if you go to your company now and you ask them, who's responsible for contract compliance? You go to the compliance, they will tell you legal. You will go to legal, they will tell you audit. You will go to audit, they will tell you risk. You'll go to risk, they'll send you back to compliance. And in the end, you'll find no one is doing it. And you have these contracts with so many terms that are required to be fulfilled, either on your behalf or on your vendor's behalf, which no one is really monitoring. It can open the door for further things. So trend analysis and data analytics, continuous auditing, market comparisons, so on and so forth. So we talked about that. So your anti-fraud program now, so you need to have an anti-fraud training program for sure, guys, okay? And this anti-fraud training program needs to be tailored to the industry of your organization and to those specific departments. So it's not enough to do an anti-fraud training program by telling people what is fraud. That's maybe at the beginning. But later on, when you want to do anti-fraud training for your organization, you need to give an anti-fraud training to your procurement function, highlighting exactly the type of procurement frauds that could happen. This creates awareness and prevention at the same time. You need to go to your finance people and give them an anti-fraud training as exactly where fraudulent financial reporting can happen. You need to go to your HR people and train them exactly on fraud indicators when you're hiring. Okay, so I'm not going to go into further details. There's a lot of examples, but what I see still at a very early stages is that we give fraud training, and then you go and you tell them, okay, this is fraud risk. This is what a fraud means, and this is what happens when a fraud happens. So it's not really something. It's good as a start, but you need to go down and down as you will as your fraud maturity grows further in your organization. So fraud investigations, again, I believe we're talking about fraud investigations now. Yes. So as I told you before, we need to have a plan. If a fraud happens within the organization, what do we do? And before we blame the auditor, okay, what do we do? How do we react? If we're going to blame the auditor, they cannot do the investigation. They're no longer independent. So you're going to need to have a plan. And there's a lot of details that goes into that you need to consider. So conducting investigations, also, we need to also understand the laws of the country we are operating in. How does it impact evidence gathering? How does it impact computer forensics? Witness interviewing. There's a lot of there's a lot of information that can happen in that regard to take into further consideration. And finally, as I told you, your fraud risk management framework that you apply in your organization needs to be periodically subject to monitoring and review to really assess its effectiveness. To what extent? And guys, year one, it won't be very good. I'm telling you. You'll just make one step. Year two, it will be better. You educate your audit committee more, your compliance committee more, you educate your board of member directors more. They will be further on board, and the wheel gets rolling on and on. And again, guys, we need to have this this report that we will give to the board on the status of fraud risk within the organization, the status of the fraud risk assessment framework, to what extent governance systems are there. We need to start having fraud reports on the board of directors table. Okay, so this is how we start creating that level of awareness, because again, guys, we need to focus on prevention, not only detection and investigation. Many organizations are only focusing on detection and investigation, which is after the fact, which is important, but not enough focus on fraud prevention. And this is what fraud risk management can help you do. So who is responsible for fraud in the organization? I'll have a separate video on that, but I really believe that when we want to talk about responsibility of fraud in the organization, guys, we need to dissect that in terms of fraud prevention, fraud detection, and investigation. So fraud prevention, I start with the board of directors. I start with the governance, as I discussed. I start with the anti-fraud policy, the anti-fraud framework. I start with the anti-fraud controls that are designed. And then I go down to compliance. What are you doing, Mr. Compliance, on code of ethical conduct training, on conflicts of interest, on segregation of duties, on disclosures, on transparency, on all of these very important topics that many compliance functions are not focusing on. And then I go to the auditor and I say, okay, look, Mr. Audit, you need to assess the effectiveness of this fraud process. Are you in your audit reports mentioning that we don't have a fraud risk management framework? Are you mentioning that fraud governance is weak? And then I go to the risk management guys and I ask them, show me as part of your operational risk framework what you're doing as it relates to fraud risk within all of these different departments. So I cannot elaborate further. There's a lot of details that goes into it, but the responsibility is diversified when it comes to prevention and detection. And then investigation, okay? So investigation, okay, who's gonna investigate? Is it compliance? Are they independent enough? Is it audit? Do they have the expertise to do so? Guys, an internal auditor, even a CIA, is not considered qualified to do a fraud investigation. Be careful. Fraud investigations requires a specific set of skill sets. So these are questions that we need to ask ourselves. So basically we have, as I said, this responsibility is diversified. Guys, I really hope you enjoyed this. There's a lot of more details that goes into it. Usually in our certified enterprise risk specialist program that we have with Leoron, we have a whole section. We have a full 2 days that are fully dedicated to all of these topics. So if you want to know any further, we would happy to see you on board. These are my contact information, and I'm ready to take any questions, Ivana.
Yes.
From any of the people.
Thank you for the wonderful presentation, Mohamad. Now, I could see people were quite active and interested with what you were talking, and there were questions that I will scroll back through the chat right now. And okay, we'll start. First question was from Mohamad Kalulila. Explain the role of risk management in management of fraud risk management. Okay, who will assess bank's fraud risk management framework of the bank?
Sorry, what was the last one?
Who will assess bank's fraud risk management framework?
Who will assess? Okay, so let me address the first earlier question. Well, first, look, fraud risk management, I believe, as part of their operational risk management framework, as I said, they need to cater for fraud risks. I believe he asked the question before I explained it.
Yes.
And the second part regarding who will assess the effectiveness of the fraud risk management framework, I believe the internal auditor has a key role in that. They need to inform the board of directors to what extent it is effective.
Okay. We have a question from Ashwaq Al-Khuraif asking, is it possible for fraud management to do an exercise where fraud management team try to commit fraud, then do the needed analysis?
Can you repeat that, please?
Yes. Is it possible for fraud management to do an exercise where fraud management team try to commit fraud?
I didn't understand the question.
Okay.
If you can go to another one, please.
Okay, I do know Ashwaq. I'll make sure her question is responded later. Another question from Ashwaq. For small organizations that don't have function for fraud management, is it better to have this activity under compliance management or operational risk management?
Excellent question. Yes, look, at the end of the day, it doesn't matter who does it, but at least someone does it. So what I advise for small companies, even big ones don't have fraud departments yet, really. So as I said in my last slide, so we need to disperse that responsibility between compliance, risk, and audit. Compliance could play a very important role in code of conduct, related party transactions, transparency, disclosures, and so forth. Risk management when it comes to fraud risk, and internal audit in assessing the overall framework.
Okay. We'll move with next question.
For someone, Evie, someone just mentioned that some compliance functions have fraud departments. My answer to that, you need to identify what is the responsibility of that fraud department within the compliance function. And many times it's purely focused on fraud investigations. But then who is focusing on prevention and detection? And that's a very important topic that you need to address. So it doesn't mean if you have a fraud unit, you are covered in all areas of fraud. Go ahead, Evie.
Okay. How would you classify frauds in a trade transaction like presentation of a fraudulent bill of lading?
How will I what?
How will you classify frauds in a trade transaction like presentation of a fraudulent bill of lending?
Okay. Okay. How will I classify it?
Yes.
What does he mean by what type of fraud is it? Is that what they mean?
Well, this is Mohamad Halulila. I believe if he's still here with us, he can unmute and maybe.
Okay, go to the next question,
Okay.
and then he can write back. Guys, let your questions be detailed so I can really understand the background, so I can answer.
Okay. Well, next question is. What are the major fraud and risk in the clearing of and forwarding department, and how to mitigate these frauds and risk?
The freight forwarding department in a shipping industry.
Well, there is no specification.
Okay, I'm personally I'm not experienced with that type of industry, so I wouldn't be able to answer that honestly.
Okay, well, we do not have a clear industry background specified in this question, but
Yeah.
clearing and forwarding department, probably that can give you any direction. Anyway, we'll get in touch with Samuel again if necessary to support with the response. Okay, another question. Do we need to have a different document approval from BOD Audit Committee that mandates the fraud risk management program? So do we need to have different document approval from BOD or Audit Committee that mandates the fraud risk management program?
Okay, that's a good question. Well, the Audit Committee usually don't approve, they recommend, but definitely the Board of Directors does not, the Board of Directors will not approve. They will issue a mandate to establish a fraud risk management framework. So it's not really an approval. Now the document, if he's talking about the document, the fraud risk management document that is developed by the compliance and the risk, well, yes, that will not be approved by the Audit Committee. That may be reviewed by the Risk Committee and the internal auditor, maybe. It will be approved by the Board of Directors if he's talking about that document.
We do not have a clear specification, but I hope this was a good answer, helpful. We have another question. SAMA has already a legislation, yet many companies does not an independent fraud department. How can we escalate this to the BOD when it's weak in the company?
Okay. Okay. We need to first understand the mandate of that fraud department within compliance. So exactly, again, what is that fraud department responsible? Is it only focused on investigation, or is it also focused on prevention and detection? That's one. Two, how we can escalate to the board? Well, depends. The compliance function has a reporting line either to the compliance committee, or if there is no compliance committee, usually they will have a reporting line to the audit committee. And therefore, this is their channel whereby they can communicate this to the board. So unless, I believe in most banks, the compliance function has a line to the board. So they can communicate that to them if there are any weaknesses in that regard.
Shall we move to the next one? Okay, next question. Who is responsible to implement identified risk during the assessment?
Is responsible for what? Sorry?
Well, the word is identified, so I believe.
Identified. Okay, so basically that's a great question. Okay,
like any other risk, guys, okay, the risk management function is not responsible to identify the risk. The risk management is an enabler that will assist the different process owners in identifying their own risks. And this also applies to fraud risk. But the question is that what type of mechanism, what type of tools will the risk management function use to get these different process owners to identify their fraud risks? This is the challenge.
Okay, we move to the next one. Is it possible to accept approval authority from a senior management to do risky tasks?
Is it to get approved from a senior management to do what?
Risky tasks.
Okay, so can you repeat that question, please?
Yes. Is it possible to accept approval authority from a senior management to do risky tasks?
I really don't understand the question. There has to be more details into that question. Yeah, I don't want to answer what I understood from it, and it could be wrong. So I'd rather have more details.
We'll give opportunity to Ali to maybe give more details of his question to be more helpful. There is another question. What will be the security clauses should be included in the third-party contract for risk management?
Also, we need more details. These are very, and the people who are asking these questions, they're asking them based on their understanding of specific things in their organizations. But I need some more background so I can give a correct answer.
Okay. Next question. Is it true that internal control department are always confused regarding who is responsible for it?
Yes. Always there is a confusion, and we need to understand what is internal control department. And I don't think we still have something called an internal control department. Internal control is everyone's responsibility, but there is still today, there are overlapping activities, and there are many challenges facing the relationship between audit, risk, and compliance and other monitoring functions. My advice for that is they sit down together and they talk very nicely to each other, and they document exactly who is responsible for what. If they don't agree, they go back to the board, let the board decide for them.
Okay. Well, next question is it possible to establish like an internal fraud committee to handle it?
Handle what?
No specified details.
If we're talking about, if we're talking about an internal fraud committee to handle fraud risk assessment, that's fine. As long as I said we have a diversity of people with knowledge and background to do that. If we are talking about handling a fraud investigation, this will get tricky, okay? So we need to differentiate, but by what type of fraud activity will this internal fraud committee oversee and handle?
Okay, next question. If fraud management team is reporting under internal audit department, can we still consider IAD independent in assessing the effectiveness of the fraud management function?
Good question. Like any other activity, we need to first determine exactly who is doing what. So if we have fraud investigations under internal audit, it means they are only focused on investigations, which means they can still assess anti-fraud controls that could be implemented by risk compliance and the board and the senior management. So that from that perspective, they can. But now if you tell me internal auditor is responsible for fraud prevention, detection, and investigation, which I doubt, then definitely their ability to assess the effectiveness of the fraud management function or the fraud risk management function within the organization has become impaired, and they will not be able to give their objective opinion on that topic. And therefore, this is why I do not advise that internal auditors take on that duty.
Next question is, the fraud department should be directly linked to the board, right?
Again, let's first discuss, we need to go into details at what is this fraud department responsible for, okay? So once we agree what it is responsible for, we can determine its reporting lines. Definitely, if it is a standalone function, it is very healthy for it to report to one of the committees at the board level. This is a very healthy thing. If it's part of the other monitoring functions, it automatically has a reporting line to the board.
The most important thing is we determine what this fraud department does. In many organizations, we find them, they say fraud department, and everyone has their own understanding of what it does. It needs to be very clarified exactly what it is responsible for.
Okay, we have clarification from before from Mohamad Halulillah. Do banks need classification of frauds in their fraud policy? My question was related to the transactional frauds committed by counterparty which is not our customer.
Okay, so we're talking about an external fraud by a client or a vendor. Okay, yes, it is classified as an external fraud, and yes, we need to make sure we have enough due diligence being conducted for clients and third parties alike to make sure our onboarding process is effective and that we only onboard people that have the ethics that we need them to have to do business with us.
Next question is, what will be the security clauses should we include in the third-party contract for risk management?
I didn't understand that question earlier. That was an earlier question, and I didn't understand.
Okay. Let me see. So Samuel says the import and export department in a manufacturing company usually takes care of clearing and forwarding of risk management, yes, PM, FG. My question is, what are the likely fraud risks? What are the likely fraud risks?
This needs a whole session on its own.
Okay, we'll make a note of that and hopefully support it with it. We have Wael Kafarani asking, in your opinion, what are the scope areas that became more vulnerable to frauds during COVID times?
Well, definitely, Wael. First, the fact that we are going remotely now, cyber fraud is high. As we said earlier at the beginning of the presentation, we have cyber fraud. Definitely, we have payment fraud. We have identity theft. These are all, and we have override of internal control by employees that could result in occupational fraud within the organization, as it relates to payment fraud or frauds relating to conflicts of interest. So basically, cyber fraud will be at the top of that list. Where
we have another question saying, can you recommend if there is available fraud risk framework we can adopt and implement in our organization?
Yes, the one I explained, which is the COSO Fraud Risk Management Guide that was developed based on the COSO Internal Control Integrated Framework. You can find it on www.coso.org.
Okay. I'll conclude with the last question from Manish saying, sometimes fraud investigations require checking employees' emails, personal details, etc. Whether there can be any legal implications on fraud investigators for performing this task, and if so, how this can be mitigated, and or whether it comes to organizations which is requesting for such investigation.
Okay, my answer to you is it depends where you're living. So you need to sit down with your legal and get an understanding about the laws of the land, and get an understanding about what exactly is allowed and not allowed in occupational fraud investigations as it relates to specific companies. So, for example, in many countries, you're not allowed to record and listen to employee conversations on their work phones if you haven't already told them that they are being monitored, for example. So basically, in some countries, you need to inform them that that you are listening into their conversations in general, or it would be considered illegal if you did not and then you listen to them otherwise. So basically, you need to really get an understanding what you're allowed and not allowed to do based on the laws of the land, and then you can conduct your investigations accordingly. Okay.
Okay, well, we do have a lot of questions regarding the presentation, slides, recordings. Now, webinars are recorded and you will have ability to receive the link to follow again the same webinar. You have Mohamad's contact details, my contact details, also people who have joined through the Financial Academy. Get in touch with the person who coordinated your registration, and we'll make sure to respond to the rest of your questions, and to also provide you with the link of this webinar itself. I would like to conclude this webinar for today. Thank you, Mohamad. It was really helpful and a great presentation that you've given here. We will remain at your disposal to everyone here attending the webinar today to try to respond to your questions that were unanswered. And thank you so much, all of you, for greeting us now. So thank you, Mohamad.
Thank you, Evie, and thank you, everyone, for your attendance. And I look forward to seeing you soon.
Thank you. Thank you so much.
Thank you very much. We enjoyed it. We are not ungrateful.
Thank you. Thank you so much.
Thank you, Samuel.
Thank you, Ivana. Thank you so much. Thank you, Mohamad.
Thank you, Habibi. Thank you. Ahla wa sahla.